Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about China Everbright Limited annual report. China Everbright Limited provides a diverse range of financial services across various sectors. At the core of its operations are two primary business segments: fund management business and principal investments business. The company invests in unlisted equity securities, equity derivatives, and other areas such as new economy, artificial intelligence, advanced manufacturing, new energy, medical care, senior healthcare, overseas acquisition, infrastructure, real estate, aircraft industry chain, consumer market, wealth management, and more. In terms of specific investments, China Everbright Limited focuses on platforms related to aircraft leasing, artificial intelligence of things, and elderly care industries. It also invests in a variety of financial products including equity, debt, structured products, and others. The company offers a range of financial services including asset management, investment advisory services, return funds, bond funds, equity funds, and fund of funds. In addition to these core services, China Everbright Limited provides various other services such as management, treasury management, money lending, property and project investment, and consultancy services. With a presence in Hong Kong, mainland China, and internationally, the company is well positioned to cater to diverse client needs across different markets. As a subsidiary of China Everbright Group Limited, China Everbright Limited benefits from its parent's extensive resources and expertise, enabling it to expand its reach and offerings further. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth or decline can be identified through a review of key financial indicators. On the growth side, Everbright Senior Healthcare's increased occupancy and government purchase services model contributed to its revenue increase. Additionally, rental income from investment properties, dividend income, contract assets, capitalized contract costs, and sales of inventories also played significant roles in driving revenue up. On the other hand, a decline in revenue was observed in management fee income, consultancy fee and performance fee income, interest income, and loss of key personnel and reputational risks. These factors collectively contributed to the decrease in revenue. It is worth noting that some pages mentioned impairment losses and changes in fair value measurements, but these were not directly related to revenue growth or decline. The company's financial performance indicates a strong ability to generate cash from its core operations. The net cash inflows from operating activities for the year 2025 were HK $545 million, demonstrating a significant positive operating cash flow. This trend is consistent with the previous year, as shown in the summary of net cash inflow from operating activities on page 182, where both years exhibit positive operating cash flow. The substantial increase in operating cash flow from HK $545 million in 2025 to HK $1,691 million in 2024 suggests that the company's operations are becoming increasingly efficient and profitable. This improvement is a testament to the company's ability to manage its resources effectively and generate sufficient cash to fund its growth initiatives. Overall, the positive operating cash flow indicates a healthy financial position for the company, allowing it to invest in new opportunities and maintain its competitiveness in the market. The company's debt level and interest expenses have undergone significant changes over the years. Initially, on page 9, it was reported that the debt level decreased, but no specific amount was mentioned. However, by page 23, the debt level increased by RMB 4.5 billion through medium-term notes. Despite this increase, the gearing ratio and net gearing ratio showed a decrease in page 31, indicating a slight improvement in the company's debt management. On page 37, it was reported that total assets decreased, but interest-bearing borrowings also decreased, suggesting a reduction in debt. However, on page 157, it was noted that the debt level increased significantly from HK $195,463 to HK $193,317. This increase was followed by a decrease of HK $491,018 on page 158. The non-current liabilities also increased by HK $775,005 on page 160. In terms of interest expenses, It was reported that they decreased by 33% on page 9 and further reduced due to refinancing offshore bank borrowings with higher cost and onshore notes upon maturity on page 23. On page 132, the effective interest rate decreased from 4.11% to 2.95%, resulting in a decrease in interest expenses. Overall, while there have been fluctuations in debt levels and interest expenses, the company has made efforts to reduce its debt burden and interest payments over time. The financial performance of the company varied across different segments and regions in the recent period. On the positive side, the principal investments business saw a significant improvement, with a profit increase of over 100% to $105 million. The financial investments segment within this business recorded a substantial reduction in losses from $991 million to $26 million. Additionally, the cornerstone investments and real estate segments within principal investments business also performed well. The fund management business also reported an improvement, with a profit increase of $487.9 million. Furthermore, the Beijing, Chongqing, and Shanghai regions demonstrated strong performance, with various investment projects contributing positively to the company's financials. Key investee companies and financial cornerstone investments within principal investments business also performed well. However, some segments and regions underperformed. The fund management business real estate segment recorded a significant loss increase of 93.9%. Primary market investments and secondary market investment segments reported operating losses of $HK366,809 and HK532,341 respectively. Key investee companies within principal investments business saw a decline in performance, while the fund of funds investments within fund management business also experienced a decrease in value. Management is emphasizing a multifaceted approach to drive the company's growth and development. One key strategy is deepening engagement in technology innovation and emerging industries, as well as focusing on aircraft full life cycle services and senior healthcare management. This is complemented by building systematic investment capability through long-term value investments. The company is also prioritizing cross-border deployment from a China perspective, which involves pursuing opportunities abroad while maintaining a focus on domestic markets. Furthermore, management is strengthening fundraising efforts to support new funds focused on early-stage, small-scale, and hard technology investments. In addition to these initiatives, the company is improving its risk prevention and control measures, investing in IT infrastructure and innovation, and enhancing compliance policies and procedures. This includes maintaining effective monitoring and guidance of public opinion and managing the company's brand usage. Overall, management strategy involves diversifying the business through various investment strategies, including primary market investment, secondary market investment, fund of funds investment, and principal investments. By focusing on these areas, the company aims to generate fees from managing assets and making investment returns through co-investing in funds. The company's financial records reveal a consistent payment of dividends over several years. According to page 30, each share has received a total dividend of $0.10. This trend is further confirmed by multiple other pages, including those mentioning stable dividends and specific dividend payments for both final and interim periods. While the company has been diligent in paying out dividends, there is no clear evidence of share buybacks within the provided records. The absence of any mention or documentation regarding share repurchases suggests that this aspect of the company's financial strategy remains unclear. That concludes the financial summary for China Everbright Limited. Feel free to comment below, and I will be happy to answer them when possible.